Hi, this is Doug Rothschild with Performance Trust Investment Advisors from the floor of the CME Group. The hunt for yield is on. Whether it's yield, income, or returns, institutional investors around the world are all looking for the same thing. Where do they go to put their money? I've talked to a number of them over the last couple of weeks, including pensions, endowments, foundations, and fund of funds, most of whom are all putting money into alternative managers, either in the form of hedge funds or alternative-based mutual funds. And there's four places really that they're looking to rotate their money. You've heard about the rotation from bonds into stocks, and that is happening for institutional investors. It's happening in the form of long-short equity managers, where investors are like the idea of long-short equity, particularly event-driven or high-dividend stock-type managers. They're trying to avoid long beta plays with managers who have long exposure of 50 to 70% traditionally, long-short equity managers, and they're focusing on event-driven type strategies that are in equity markets in hopes that events that are going to come, such as the March 1 fiscal cliff date, which is kind of round 2 of the fiscal cliff, earnings cycles and other things might increase volatility and provide opportunities for stock pickers as correlations have come down. Another place they're looking is global macro. Global macro is interesting because those are discretionary managers who are taking the world's asset classes and looking at them holistically and trying to find places that are out of line. And there's lots of opportunities there for discretionary global macro, especially if volatility were to increase. The VIX currently is somewhere around 13. If the VIX increases, global macro guys tend to pick up some volatility and they benefit from that, and their ideas would be helpful. Another area is CTAs. CTAs have not done well over the last 2 years. It's a very cyclical trade, and CTAs, commodity trading advisors, are trend followers, and they're trying to find 3 or 4 trends a year where to make all their money, but they're trading 180 markets globally. So that's another place to look for institutional investors. And the fourth place continues to be structured credit, mainly in the form of mortgages. Mortgages are attractive because the U.S. housing market is the one bright spot in this economy in a meager growth environment. Housing has gotten substantially stronger over the last couple of years. It's stabilized and starting to improve, and we continue to see strength there, and mortgage managers have performed well. It's the best performing asset class of any each of the last 4 years. So there continues to be opportunity there where you can get yields of 6 to 12% depending on who you go and what part of the collateral and capital structure you play in. But mortgages is another place institutional investors are looking. So those are the places we are looking at as well, primarily in the mortgage space due to the stronger housing. If you're interested in that, there's lots of opportunities out there. From the floor of the CME Group, I'm Doug Rothschild for Performance Trust Investment Advisors.